generally, we spend a lot of time thinking about where we should invest and how we should invest and how long we should hold it for. But normally, we don't give a lot of thought to how our investments are taxed. So let's take some time today, Feroze, to actually talk about short-term capital gains tax.
Yes, we all try and plan our long terms, but there are circumstances which are beyond our control when we need to undo the decision of an investment. And there comes short-term capital gains. The term short-term is different for different instruments, different asset classes. For listed equity, it's less than 1 year. For real estate, it's less than 2 years. For debt instruments and gold instruments, it's less than 3 years.
And do remember that short-term capital gains tax does not carry with it any sort of indexation benefits. But that doesn't mean it's bereft of benefits, right?
Yes, Sumaira. In the short run, most often than not, you could also end up making losses. So short-term capital losses are a very powerful loss. They can offset long-term capital gains as well, and also offset short-term capital gains in the subsequent years, and 8 big years, you could carry them forward. And the rate of short-term capital gain tax on the listed equity side is 15% only. On debt and other asset classes, it is 30% plus cess. But there is another good news for a person who's not in the highest tax bracket. It can be added back to your income and taxed at a lower rate.
All right, so sometimes short is sweet and sometimes short is not so sweet. You know, like somebody said, death and taxes are the only certainty, and I guess that's what someone was thinking when LTCG or the long-term capital gains was reintroduced. So let's talk about that.
Yes, I think, Sumaira, long-term capital gains is going to be an integral part of your investing life. So understanding it in detail, I think you're duty bound to do that as an investor.